Good morning, everyone. Welcome and thank you for joining us at our special COVID-19 Q&R webinar today. I'm your host, Amy. Before we begin, I just want to go through some housekeeping with you. As there are quite a lot of you with us, you'll be put on mute and to reduce any background noise and disruptions. Should you wish to ask a question, please type the question in the chat box or raise your hand and I'll unmute you one at a time. If we don't get through all the questions within the hour, we will make sure they are answered via email and shared with all of our listeners. I'd like to now introduce you to our panelists. Today we are joined by NECA Victoria's Executive Director, Pawel Podolski, who will answer your questions on industry advocacy and what initiatives NECA is working on to support our members through this crisis. He is accompanied by our Workplace Relations Advisor, Natalie, who will address your queries on the latest JobKeeper package. And to complete our panel today, we also have our business expert, Jon Mailer from Protrade, to answer questions on how best to maneuver your business through this crisis.
Morning, everyone.
I can see there's quite a few questions coming in already. We'll just get straight into it. Looks like we've got a few questions here for you, Natalie. First one is, when must I enroll for JobKeeper payments?
Morning, guys. Okay, so the ATO's actually recently extended the time to enroll for the initial JobKeeper period. So that was 30th of April, and it's now been extended to 31st of May. So if employers enroll by the 31st of May, you will still be eligible to claim for the first 2 fortnights, being 30th of March to the 12th of April and 13th to the 25th of April, 26th, provided they meet all eligibility requirements before that time. And the payment will now, so for the first 2 fortnights, the payment has now been pushed back to the 8th of May. So provided you make that initial payment of $1,500 per fortnight by the 8th of May, you will have met the wage condition.
Thanks, Natalie. Another question here for you. How do you know if you've been accepted as eligible after you've enrolled for JobKeeper?
So with enrolling, at this stage, there's no formal notification as such that will come back saying, yes, you've been approved or eligible. That's yet to be announced. So essentially at the moment, it's operating on a sort of self-declaration, self-disclosure type basis in which if you believe that you've met the eligibility criteria and you've got the supporting documentation, you're able to actually lodge that application, and provided you tick all the relevant boxes and have got that supporting document on hand, should it be required, which it may be at a later stage, then you're good to go. So at this stage, there's nothing formal. I know the members sort of concerned that there's nothing that's come back to them saying you've been approved. But at this stage, the ATO is operating on the basis that you're doing the background checks and making sure that the business is actually eligible.
Thanks, Natalie. Looks like we've got quite a few more questions here for you. What if I'm not eligible initially for the JobKeeper? Can I become eligible later?
Yes, so if the business doesn't initially meet the decline in turnover test or the alternative test, you may become eligible in later months, so or later periods. So essentially, it could be the case that you're actually having quite a strong April because work hasn't started dropping off as of yet. However, you don't have much in the pipeline, for example. In which case you've got 2 options. You can either apply later, and that is when you then become eligible. And once you're eligible, you're actually in for the full period. Or you can look to use the quarter turnover method, in which you're going to forecast. So provided you've got enough supporting documentation to say that you don't actually have work within the next couple of months or within that period, then you can use the quarter test as your to meet the eligibility criteria. So if you're not initially eligible, you can become eligible later.
Thanks, Nat. Another one here for you. If someone currently receives less than 1,500 per fortnight, do they qualify for JobKeeper?
Yes, so this one's come up quite a bit. You've probably seen it in the media, but really importantly, if you've got an employee that doesn't regularly earn 1,500, they are still going to be entitled to the 1,500, assuming that they meet the other criteria. So to meet the wage condition of the JobKeeper payment and therefore get that money back off the ATO, you're going to need to pay all employees that are eligible the minimum of 1,500 per fortnight. So it's really important that that does happen, and you can't unfortunately sort of pick and choose. So in some cases, it's essentially going to mean that employees who are earning less are now substantially in front.
Thanks, Nat. Another one here for you. If an employee is on unpaid leave for the purpose of taking long service leave through co-invest, are they ineligible for JobKeeper?
So if an employee's on a period of paid or unpaid leave, they're still eligible for the JobKeeper, assuming they meet all the criteria. However, if they are on a period of leave, so it could be unpaid leave or paid leave, such as long service, that can form part of the JobKeeper payment. So there's two different scenarios here. So you might have someone that had their long service leave is managed through co-invest, so that will be for the majority of your workers. In which case, if they're on long service leave, the funds will come directly from, go from long co-invest to the employee. In which case, you as the employer have not met the wage condition if you're not passing on the 1,500 that you received from the ATO or prior to. However, if you've got an award-free employee or someone that's long service is actually paid direct through the business, then at this stage, it appears that that can form part of the 1,500 JobKeeper payment. So you just want to ensure that that was something that was booked in prior to or agreed by the employee. But yes, so that in that case, it can form part of the 1,500. But in the case of someone's long service that's managed through co-invest, it could be that they're actually better off because they're receiving the 1,500 and their co-invest payments.
Thanks, Nat. Another question here for you. Can I choose which of my employees I claim JobKeeper for?
No, so sort of going back to that point before, it's a one-in, all-in arrangement. So there'll be the exception of potentially some casuals that haven't been with you for the 12 months or not working on a regular and systematic basis. But aside from that, assuming all the eligibility criteria is met, all your employees need to be paid. So again, that could be someone that was earning less prior to the JobKeeper subsidy coming into effect.
Thanks, Nat. Looks like I've got a question here for Jon. I have a few weeks of work booked in. However, am nervous about after that. Any suggestions as the phone is not ringing as much?
Yeah, definitely. And that's not an isolated case. We're sort of experiencing quite a number of people who have work booked in and been quite confident leading into what's happened over the last 4 to 6 weeks, but the phone's not ringing as much. So there's two things that we're recommending. It's first and foremost, we've got what we call a protect and prepare strategy. And first and foremost, it's protecting the existing work that you've got booked into the calendar, because even though it's there and deposits may have been paid, there's no 100% certainty that it may all go ahead if things if things continue. So the first thing we're recommending is making sure that you're on the phone to all of the customers and the clients that you've got the work lined up for, and just to check in with them and make sure that they're all good, you know, and if there's other ways you can serve and help them to make sure that the existing work that you've got booked in is still going to go ahead, and just to reassure them, because the biggest thing at the moment is turning the uncertainty or the fear around uncertainty and creating certainty. So by you being on the front foot, not assuming that everybody's going to go ahead, but just making sure that, hey, just checking in, letting you know what we're doing, our procedures and our policies around the current situation, letting you know our supply chains are all good. We've got all our materials, and wanting to make sure that you're all good to go just secures and protects the existing work. But it's also an opportunity to prepare for the other side of this, because what we're recognizing is that there's some people are really freezing. They're just, you know, not doing anything. If the phone's not ringing, then you need to be on the phone. And what we're recommending is that you be on the phone, not sending emails, not doing the traditional type of approach that you might do to generate work, but you be on the front foot, particularly to strategic partners and the referral partners and other trades that you may be working with, just to check in with them. And it's more around an air of concern and wanting to add value, wanting to support and look at ways to help and be of service in different ways that you might not have been before. It's also an opportunity to listen in the background for ways that you can help the traditional market with different concerns that they may have. You might have the same target market, but their concerns and challenges may have shifted in the last 4 to 6 weeks. And can you be on the front foot to look at what you can help them with? Because I guarantee probably 80 to 90% of businesses are just sitting back. They'll wait to ride out the scenario, and hopefully things will be back to some sort of normality in the next few months. But the reality is, it ain't never going to be the same. There's going to be some aspects of what was come back, but there's also going to be new ways to help customers. So what we're recommending is you structure and be proactive around the type of activity that you're taking. So if the phone's not ringing, it's being on the phone to all of your past customers, all of the customers that you've done work for in the last 12 months, and just checking in. How are you going? How can we add value? How can we support? What are ways that you could offer and give things away for free, or low cost benefits to your customers that have a high value perceived to them? Because it's the activity that you're doing now that will have you be a leader on the other side of this. So the first thing is protect the existing work that you've got booked into the calendar, and then start preparing for the other side of things by making phone calls, being on the front foot. And it may require you to make calls that you've never made before, have conversations that you've never had before. But what we're really seeing is that will bring in work that you haven't ever thought of on the other side of this as well. So the two things, protect and prepare, is the key.
Thanks, Jon. I've got a question here for Pawel, a little bit similar to Jon's question. I'm worried about future pipeline work. What is NECA seeing around the industry in terms of work trends?
It's actually quite a good lead in. So look, Jon's 100% correct in terms of this challenge we've got collectively around us is around managing uncertainty, and I think that's really the killer. And it's the uncertainty at every level. It's obviously inside your businesses, it's across the industry, it's across many pockets of many of our supporting industries as well, which is sort of creating this sort of void right now. So I think, you know, what Jon said was absolutely spot on. With your businesses, get on the front foot and you know, do the things that are uncomfortable. However, there will be work coming our way once a bit of that uncertainty settles down at various levels and people go back to it. So there's a number of things from a NECA perspective, and this is actually probably the biggest focus for me right now. We'll talk about some of the things we've done over the last, you know, a month or two, but in terms of the future looking focus that I have right now, the biggest thing for me is really to focus on getting the right conversations going around the future of work. So many of you might be aware of, or if you're not aware of, very recently the Victorian government has announced the establishment of a Building Victoria Recovery Task Force, I think is the full name, a bit of a tongue twister. And that task force has been set up to work through a number of opportunities and brainstorm which areas of the building and construction industry should be stimulated or invested into, and what projects should be either accelerated or put on the table, etc. So there will be a number of initiatives coming out of that, and from a NECA perspective and from a personal perspective, there's a lot of focus being put on making sure that we have a voice at the table and we are contributing to that. So there is some pretty big investment, by the way, guys, being talked about there. Infrastructure projects, being the key part there. Infrastructure projects take a little bit of time to work through the mechanics. There'll be tenders, there'll be all sorts of things that probably need to get worked through. The other aspect that I'm very keen to make sure that we progress conversation around is obviously the service and maintenance work. And that's probably the first thing that's sort of gone on hold a little bit. When I talk to members in terms of where the work is. So really making sure we identify and have conversations around all sorts of opportunities to drive maintenance projects. We've got schools, we've got hospitals, we've got all sorts of, the list is quite long actually. It's just getting the right motivation in the right places. So certainly we are driving and will be driving conversations around that. But also nationally, at a NECA national perspective, one of the wonderful things around events like COVID-19 is they really bring everybody together in terms of working, across collective outcomes. So nationally, we're also looking at various initiatives that we could run across all states that will generate work for our members, and we're starting to tease some of those details out, starting to look for ways to get potentially either funding directly through NECA, so we could coordinate some of those projects, or I guess recommending, for some of those grants or funding to go directly to the buyers of services to incent them to start off work. So there is believe me, a lot of focus and a lot of attention, a lot of planning going inside of NECA in making sure that we are heard and we're representing our industry. But in the meantime, as that gets worked through and as those conversations keep flowing, certainly inside your businesses do the same in terms of philosophy. And as Jon said, get out there and talk to as many people and keep your finger on the pulse around some of those initiatives. There is going to be a lot of activity coming out very shortly in terms of trying to stimulate our industry.
Thanks, Pawel. I've got another question here. Might be more so directed at Nat. Has the Vic state government reviewed the request to extend payroll tax relief to employers that have greater than 3 million in taxable wages?
I can certainly take that one.
Yeah, go ahead.
I've very specifically been driving some of those conversations. So look, the short answer to that question is there is no avenue right now. It is, all the subsidies are aimed at 3 million and below. So, that's actually very, very helpful for a very large percentage of our industry, because, our industry is made up of predominantly SMEs, many of which are operating under that. However, that does almost to some extent discriminate against some of our larger players, which, don't get to tap into that. So we have had those conversations. The answer is not great in terms of anything we could do, but there is two things I will say to you. So firstly, coming out of that, those conversations, we have actually submitted a formal submission to the Treasurer in Victoria, asking for a consideration of and taking the opportunity, given where we are now and some of the steps that are already being taken, to go the full way and just simply abolish payroll tax as we go forward. So that submission has been presented. I envisage a further conversation around that. I guess our voice is, we're not alone in our feelings around the concept of a payroll tax, I guess. I think other industry bodies are also very supportive of that. So I think that conversation might get some traction. That's one. The other thing is, for the larger organisations, I would suggest, even though it's not a sort of an off-the-shelf offering or anything like that. But I do know of a few of our members that have gone through the process of requesting deferral of some of their payroll tax liabilities on grounds of, you know, genuine hardship and cash flow issues, etc. So if you are in that position and if you do want to explore that, I know that the ATO does offer avenues for that. Obviously, it's a process to go through. So depending on how much energy you have to to follow that process and how incented you are, but some of our members have gone to that to that extent as well. So hopefully that answers that. John, anything else from your broader perspective that you're seeing across the nation? Because, you know, payroll tax is very state specific, but anything you're seeing more broadly around that topic?
Oh, I guess the only insight I could share is that from an economic perspective, and I'm not an economist and I'm not a futurist, but what I'm really seeing is that Australia is probably one of the best countries that has managed this situation better than most. And I think what we'll see is that Australia will recover quite quickly from, because there's two waves. There's the health wave, and if we continue to behave ourselves, you know, things will ease in the way that we've been living. But the economic wave is the one that will be coming. And I guess when we're talking about preparing for that is we're not, obviously we can't predict how people are going to spend, where the focus is going to be. But I do feel that, you know, having worked with businesses through challenges like this before, and particularly the GFC in the late 2000s, that Australia is probably better positioned than any other country that I know of, apart from New Zealand, to recover from this. And I wouldn't be surprised that late 2020, early 2021, business will be back to, you know, the type of workflow and energy, in particular in Victoria. I mean, the amount of money that's been invested in infrastructure at a higher level over the last 12 months has been incredible. So I wouldn't be surprised if that is back on the radar, and people are quite optimistic around the future of what's happening in Victoria in particular. So
yeah,
I trust that sort of
spot on.
That's what you
We
say,
still don't want to pay payroll tax though, so we will continue to push that barrow. So, but in short, guys, payroll tax, 3 mil is the magic threshold. There's a lot of conversation we're trying to push at a broader level, but for now, it is what it is, unless you want to go and seek an exemption.
Yeah, and I'm back here there as well. Payroll tax is one of those ridiculous things that doesn't incentivize anyone to grow. So I'm on your side there too, Pawel. Good, jump on.
Thanks for that. Thanks for that one. I've got a question here for Natalie. If an employee resigns, has worked only 20 hours in the pay week, net less than 750, are getting paid out of all their entitlements, do we have to top up the 20 hours so the net equals 750 for ordinary hours?
That's a complex one. So the employee has resigned, did you say, Amy?
Yes, so if an employee resigns.
Yeah, okay. In short, if I've understood that correctly, they're going to need to be paid the minimum of the 750, regardless of whether that's made up of annual leave or their ordinary hours. While they're in the notice period, they continue to be employed, so there's no huge difference. Unless they've been placed on reduced hours, it'll just be, you'd continue to operate as normal. But any JobKeeping, any arrangement that's been put in place under the JobKeeper, it will revert back to how it was prior to that, and all entitlements on termination are to be paid out with whatever is within the employment contract. So it's not based on the arrangement under the JobKeeper. So things like accruals, they still continue to accrue on your full ordinary hours prior to a direction to or a reduction in your hours that's based on the JobKeeper legislation. So I hope that answers that one. I don't know, it was a bit of a curly one, but if it doesn't, feel free to send it through as well and I can have a look at it.
Thanks, Nat.
Yeah, I think If I just add on that, because there've been a couple of curlies that you've had, Nat, given specifically the where we are in the evolution of the thing. So guys, if you do have very specific queries that we don't necessarily capture by a catch-all answer, feel free to reach out to our team, and we'll actually look at your individual cases, because some of those answers have a generic answer which applies to most, but the real devil's in the detail when you look under the covers of the specific case. So hopefully this is useful for most, but if you are concerned about a particular case, just reach out to us afterwards, and we'll actually help guide you along there as well.
Yeah, thanks Pawel. That's important, because we would need to have a look at the terms within the employment contract and any contractual obligations, as well as the legislation. So yeah, good point.
Thanks for that. And then another question here for you, Nat. Can you terminate someone's employment if they're on JobKeeper?
Yes, yeah. So the same rules will apply. There's no specific protections that have come into effect at this stage. I guess the idea of the JobKeeper, however, is to try and keep your employees so that you can make it through the other side of this. So where possible, we're advising don't do that unless there's something going wrong. So there's no reason that if if you find that an employee is underperforming, you might then manage that performance, and it could ultimately result in a termination, and they might resign. So there's a number of different things that could happen. It could also get to the point that you actually do need to make that tough decision to, and at that stage you would follow the general redundancy process. But again, the idea of the subsidy is to try and keep as many people on board as you can. So
thanks, Nat. I've got a question here for you, Jon. What can I do to manage my cash flow if work is light on work, sorry.
Light on work, yeah. So, cash is the most important financial asset at the moment. Work in advance is great. Profitability is obviously important, but keeping cash in your business right now is most important than ever. So, two aspects we talk about again with protect and prepare. Protecting is making sure right now I keep as much cash as I can in my account and under my control, which is about really evaluating more or less what's due to come in and what's due to go out. So first and foremost, it's about evaluating what are all the, from an expenses perspective, what are all the costs that I can really evaluate or reevaluate that are going out on a weekly or a monthly basis. And just to probably give some context here, protecting isn't about hoarding. It's not about, I keep everything and nothing's going out, because I really feel that, communication about in and out reflects cash in and out as well. And that it's not a time to be, it come from fear and scarcity. It's also understanding that money is important to keep circulating within, the industries as well. So first and foremost, it's evaluating and understanding the difference between a cost and an investment. A cost is something right now that you won't get a return on, where an investment is something that when you put money out, you get a return on. And so it's about understanding what are the investments that are important to keep going, like your bookkeeper, your accountant, support, with Meeker and memberships like that. You're always going to get a return back. But some of the things that you may have traditionally spent money on, now's the time to reevaluate that as well. So that's keeping the money in. And it's also important to look at ways that the work that you've finished, the work that you've invoiced for, and that money is also going to be coming in quickly. So an example, last week we were speaking to an electrician. He says, I'm due to get paid at the end of this week and at the end of the month. I said, don't assume that you're automatically going to get paid. Even though you may have been paid before, you need to be on the phone, checking in, just making sure that, we've got our invoice in, it's due on the 28th, the 30th, just want to make sure that it is going to be paid because we're planning out cash flow as well. So it's making phone calls and being in communication with, clients or customers that you've never had to before. So it's protecting what's been completed to make sure that you've got the cash in now. So remember, communication in and out will reflect cash in and out as well. The other thing around protecting the cash right now is if you've got cash flows tight and you've got suppliers to pay, here's the thing, be on the front foot. Make sure that you're calling the suppliers, letting them know of the situation that you're in, looking at ways that if you do need to manage the payments with them, particularly if you've got a great relationship, because on the other side of this, your suppliers are going to want to keep you as a customer as well. So you've got to keep that in mind. They're going to still want you as a customer on the other side of this. So you may want to look at ways that you can negotiate some payment terms with them and make sure it's not a win for you and not a win for them. But one of the examples, we had a supplier working with their electrical client, and they owed $30,000. I think that was at the end of March. And last March, what they said, put in a call, see if you can pay 50% now, 50% at the end of the next month, but pay them 5% extra. Give them an incentive to want to give you terms as well. So remember, it's about managing the relationship and being on the front foot. So that's about protecting now. But if you want to prepare for the longer term, the aspect is your cash flow. And if you've never done a cash flow forecast before, one of the tools that we've provided, our community is a 13-week cash flow forecast, because depending on the type of work that you're doing, if it's more response work, obviously money coming in is more on a weekly basis. If it's more project-based, it could be progress payments, and what does that look like over the next month, 2 months, 3 months? And then also looking at what are the outgoings, what are the expenses, because now is the time to double down on how connected you are with your numbers. If you're the type of person that only looks at the bank account every month or every couple of months, now's the time to look at it weekly. If you look at it weekly, look at it daily. Make sure you're monitoring this very, very closely. And then apart from being in touch with your numbers, it's also looking at ways to prepare moving forward to bring in cash quicker. So sometimes you've got some jobs that aren't due to be paid for, maybe if they say 30 days from the end of the month or 60 days, depending on what terms. What can you do to bring that cash forward quicker? Maybe you want to incentivize people to pay you now, this week, this month versus next month. Are you prepared to sacrifice a bit of margin to get the money into your account right now? So again, an example we've got is someone who generally pays or invoices and then gets expected to be paid on 7 or 14 days from a residential perspective. They've come into and said, what can I do to get the money paid today? So they've readjusted payment terms, readjusted communication. They're now communicating with customers to say, hey, listen, we expect payment on completion versus the traditional, we'll complete, send an invoice, get paid on 14 days. And what they're actually doing is they're incentivizing people to pay upfront by giving them a discount of 5%. Now, we normally don't advocate discounts in whatsoever. But right now, if you're prepared to maybe give away a bit of a margin to make sure the money's in your account, it's much better in your account. As we know, bird in the bush, is better off having it in your account right now. So think about that. What can you do to have people want to pay you upfront versus the traditional terms as well? So I know that's probably a longer answer to that, but Pawel, yeah?
Yeah, I'll probably add two more things on top of that, John. So one is look at your contracts, and I think you touched on that, John, in terms of make them ring around and ask for cash. Don't assume it's going to come in, but have a look at your contracts, particularly where you have milestone payments, ability to ask and evaluate where you are across your project life cycle and which payments you can actually collect, because sometimes people, especially if your job's not humongous, you just leave it to the end. But there are avenues in many contracts where you can actually collect cash throughout the project based on milestones. So just look at your contract, guys. And the other thing I'll add, which I don't know if, well, I hope all our members are well versed in, but as a reminder, we've got Jon on the line here. We're very fortunate to have him online, but through the partnership we have, NECA has with Protrade Protrade actually offers, free 90-day consultation, 90-minute consultation. I was going to get you into trouble there, John. But consultations with Protrade to have those kind of conversations as well. So, as NECA members, you've actually got that ability to tap into, and there's a wealth of knowledge both through Jon directly and his entire team. So if you're thinking about cash, if you're worried about it, you've got many avenues. I mean, you certainly come to us, but you've also got Protrade as an avenue there. Please reach out and use them there. They've been great for the members that have tapped into them before.
Thanks, guys, for that.
Perfect. Yeah, and just
really important information.
Yeah, just sorry, Amy, just on that. Yeah, so right now there's no silly questions. Here's the thing: if there's no silly questions to ask about your business, the situation you're in, or assisting you around that. So if there's any support we can offer, that's what we're here for. Thanks, Amy.
Not a problem. Another question here for you, Pawel. What is NECA focusing on right now to helping members get through this tough time?
Yeah, well, quite a lot. Our team has been very, very, very busy, which is a great thing. I mean, tongue in cheek aside. So, look, as an industry body, there's a number of things that we would always do for members, but in this particular time of uncertainty, we're finding, the need and the hunger for that even more so. So, I guess one of the biggest roles I see in terms of leading our association, our industry body here for Victoria, is we're there to bat for members, right? And when COVID-19 hit, personally, but also through the collective works of a number of individuals behind the scene, we have been going very hard at trying to lobby and make sure that our industry does not close. If you look at we are as an industry compared to many other industries, we are significantly better off. That's not to say without our challenges, both current and in the future, but we are actually positioned relatively well. And whilst I don't think I could sort of stand here and take full credit for that as a NECA individually, or me personally individually, or the team individually, driving some of those conversations directly with a lot of stakeholders, as well as putting together some consortiums around the broader construction industry conversations, I think has been worthwhile doing. It's been a lot of hard work, a lot of heavy lifting, but very, very important. So I think we owe that to members. We owe that to the industry, by the way, and I think we've done that. I'm very pleased with that. I guess in amongst some of that background work, which some of you may see bits and pieces as we send communications, others will be more involved because you talked to us about your issues and we take them specifically on board. But you would have seen a lot of business as usual, as I call it, work that the team has put in just in supporting all of our membership to get through this. We've been sending guides, we've been sending almost daily information. I mean, likes of Nat, and by the way, there's a few more Nats behind the scenes that you're not seeing on screen today, working very hard to try to get answers, to try to provide as much relevance to you guys to get rid of some of that uncertainty. So that's been a tremendous amount of work that's happened over the last month specifically, but even before then. And I guess now we've done that. We've made sure that the industry stays open. We've tried to support us, collectively, including ourselves, by the way, through this tough time, navigating the uncertainty. And now, really, for me, and I've said that before, the focus is to change gears and start looking into the future. So we've survived, and now how do we thrive? How do we drive back into an environment where it's a sustainable future? And I touched on a couple of things that we're doing already through the advocacy lobbying work, making sure we as an industry are positioned for the right level of investment and subsidies coming into the construction industry, et cetera, et cetera. The other thing that I think is very important to me and probably very close to heart to many of you is the contractual implications of some of what COVID-19 is triggering or exposing. So, there will be issues around liquidated damages. There are already, process gaps probably in terms of what members should be doing a bit more aggressively around extension of time clauses, etc., and putting their front foot forwards. We've seen quite significant price hikes from a supply perspective. You know, how do we position ourselves better to cover that in the future for anything like this through rise and fall clauses, other things like that. So there's a whole contractual piece of work that I'm very passionate about in driving as well. So they're just a couple. I mean, I could reel off a whole list of other things that we're working through as a team, but it gives you a sense of both externally from an advocacy perspective, internally in supporting you, as well as just thinking ahead in terms of some of the more holistic issues that we might want to solve together. It's been quite a journey to try to balance all of those together. So hopefully you're seeing it all. Hopefully you're tapping into it, guys, and hopefully it's been useful. We've certainly more of that to come.
Thanks, Pawel. Another question for you here, just carrying on from that last question. Can you run through some key areas that NECA has been doing to ensure our industry is protected?
Yeah, so, and I've probably touched on a couple already, but in terms of a summary, I guess there's probably three categories, and I touched on this. The first priority for me was to make sure that our industry keeps operating, that we're not shut down. And as part of, we're not isolated, so it made very strong sense for me to align NECA as an industry body with a number of other industry bodies and have a very united construction industry voice out to governments and others. So we met with the Premier's office, pretty much in the first week where this happened. We put together a consortium made up of a number of construction industry players, including a couple of the unions. The biggest concern at the start of all of this was safety, obviously. We went through from stage 1, stage 2, very quickly to stage 3. It was all on the back of safety concerns. One of the things, other than asking and explaining to governments and other stakeholders the importance of our industry and the repercussions of stopping us or closing us down that would have on the economy. But the other dimension of that was, well, that's well and good, guys, and we're happy to support you, but there's a safety concern there. So we actually spent quite a bit of work, again, working across the broader construction consortium to put together some very, pragmatic safety guides out there. And you would have seen, for those of you that have tapped into that, we went, I think we're up to version 3 now. Note that all of that was put together well before any of the other big players like WorkSafe or Safe Work Australia, anyone put anything official to market. So we really demonstrated that we are on the front foot, that we know what we're doing, that we are really putting our words where our mouth is in terms of our dedication to the industry, and that hence the government can keep us open and be sure that we will do the right thing. So that actually resonated quite strongly, and we got a lot of good feedback and support on the back of that, and it's one of the reasons actually why we are and have been fully opened. We also did write to the Chief Medical Officer, I guess is the guy that actually calls all the shots in this case. I mean, the Treasurer and everyone else can have opinions and lobby, but at the end of the day, if the Chief Medical Officer says close the site down or close something down, it's getting closed down. So we've tried to establish a channel of communication there, insisting that our industry, the electrical communication industry, is an essential service. I mean, we play in support of many of very critical services that if you shut us down, I mean it's going to be counterproductive. So again, that was all there. So a lot of work to make sure that we stay open, and good news is we have. I guess the second wave for us was then focusing, well, how do we actually survive this? So we're open, that's fine, but we're still, clearly implicated, and there's broad economic implications. And I think I talked already about, some of the payroll tax conversations we've started. We've also had a number of conversations, both locally as well as federally, around some of the changes to Fair Work Act and changes to the awards, driving some more flexibility for the employer side of the industry, which obviously I represent as opposed to a union friend. So we've had a few sort of arm wrestles there on that, just to make sure that we are on the front foot and making sure that we can sustain the workforce we have in the most flexible manner possible. Some of those we progressed. Some of those didn't quite eventuate to the extent that I would have liked, but at least the conversations have been started and they are ongoing. We continue to have some of those, and I guess even as part of that example, some of the work we've done around JobKeeper, not so much influencing the legislation per se, but in terms of interpreting some of that and sharing some of the information with you, I think has been quite useful and quite complex. And I guess, as we go forward, I won't repeat myself, but my focus really now is to make sure that we have a sustainable pipeline of work out there for our industry, and anything we can do from a NECA perspective to influence that, we will be doing. Any feedback you have in terms of kind of pockets of work or pockets of industry types of work that you're interested in, particularly us, putting on the table and having a point of view in, please let us know. I'll get that into the broader consolidation of topics that I'll be raising and I'll continue to raise. So just keep feeding us what's important to you. Be assured that we are doing a lot in the background in terms of making sure that we're on the front foot as best we can.
Thanks, Pawel. Great insight to that one. Just to let you all know, we are running up. We've got about 15 minutes left, so we'll get to as many questions as we can before we close this one off. I've got another question here for Nat. It says, ATO states that we must reconfirm the JobKeeper eligibility of business via monthly declaration after we have been qualified. Could you advise why this is in place?
I think moving forward, it's always going to be important that you can demonstrate that you actually are eligible on a month-by-month basis. I don't. Is the question more so why it's each month?
Yeah, look, I might actually have a crack at that myself. I don't think there is a right or wrong answer from a, who knows what the ATO is thinking, but I will tell you what my view on this is, and it's a conversation we've had with a number of senior leaders across, across the space that I operate in. So Nat mentioned before that, the application process is really based on self-declaration. So if you believe that you meet the criteria, you sign your life away, if you like, and a lot of that is based on forecasting. And I presume what the ATO wants to do, I certainly would if I was in their shoes, is want to do that every month. You actually validate your forecast. So if you forecast, you're going to drop by X amount, and you qualify, and you actually don't in a month's time, that you put that forecast in there and reassess whether you still need to tap into these funds or not. If your actuals next month come in short of your forecast, and you're actually doing okay, even though you thought you might not do so well. 1 month is hard to tell, but if that happens as a theme 2, 3, 4 months on, I'm sure the ATO will be tapping on someone's doorstep to say, well, all this money that we've given you, and maybe you didn't actually qualify. So I think this is part of the self-reporting, and the onus being on business owners to put your hand up when you qualify. And validate that you still qualify every month as your forecast changes, because the government's already said that they will be doing audits of this. And I guess from a business perspective, the last thing we collectively as a business community want to end up in is in a place where money's been taken knowing that, we don't fully qualify, and money has been spent, and then the ATO comes and asks for a refund, if it's deemed that, what's been reported was not genuine or appropriate. So there's an element of that. Again, is that officially written into anywhere? No, I don't think we've seen it, but I would strongly suggest to you that as part of your cash flow forecasting, as part of your revenue forecasting, this is a tight loop, and every month you want to reevaluate. And it's a double-edged sword, because in some cases you know, and that, I think there was a question that previously in terms of, if you don't qualify now, will you qualify later? And that's part of that same cycle as well. You may actually not qualify right now this month, but next month you might. You might skip a month because you have a good month, and then you qualify again. So that's part of that process.
My understanding about it, sorry, Amy, is just that, you know, you're reporting as you go through. While it is a once you're in sort of situation, it's just to make sure that you're on track. And I think Pawel did touch on this, but just because your forecast turns out to be incorrect doesn't necessarily disqualify you from the entitlement, as long as you can demonstrate that it was a reasonable projection. You should be okay. But obviously, if there's a big differentiation and a big gap, and you only drop 10% in turnover, it's likely that that's going to cause some issues.
Thanks for that. I've got a question here for Jon. I'm busy at the moment and I'm thinking about hiring, yet concerned that work may dry up. What would you suggest?
Yeah, it's a great question, and it's actually one that a number of our clients are actually experiencing at the moment. We've got a number of clients who are actually leaving, you know, and that's due to the work that they put into building their pipeline prior to the current crisis, and they're at the situation where, hey, I need, you know, employees to fulfill on the capacity of what I've got right now. So two things we've done, again, in the forecasting is two aspects there is managing the commitment to your clients and your customers right now, and then also being proactive to ensure that that pipeline is full on the other side. So there'd be two things, and we like to use the act as if strategy. And there's two aspects here. Some people are playing not to lose in this environment. They're playing not to lose versus playing to win. And so so that the difference is defense versus offense, if you can relate it to an AFL game. And if we play to win, let's act as if. And that's not being arrogant, it's not being cocky, it's actually being confident and acting from the space that, hey, we've done the work to win the work, let's deliver and create a great experience for our clients or our customers, and then also be proactive, like, you know, we've talked about previously in this session about what does that pipeline look moving forward as well. So the numbers always tell the story. So it comes back down to your forecasting, to your cash flow, to your projections, to ensure that if I do put on another person, and let's say it's $60,000, $70,000, $80,000 a year, whatever the role is that you're hiring for, and then what do I need in the volume of work to keep that person employed, as well as a margin on the other side. So the numbers will tell you a story, and then you can come back with that. And what we're seeing is that, let's say it's a $70,000 role, what's the volume of work required at your gross profit margin to keep that person employed and keep the business sustainable as well. So the numbers will tell you the story, but let's play to win. Let's act as if you've done the work to win the work. And by the way, now's a good time to be hiring if you're looking, because there are a number of people who have been let go. So there will be some quality people out there with the opportunities if you're wanting to bring someone else on. So again, numbers tell the story. I would act as if, yes, let's play the game and be proactive with making sure your pipeline is full on the other side.
Thanks, Jon. Yeah, I've got a question here that sounds like it's a carry on from a previous question that was answered. It says, but they're wanting us to top up our employees' pay slips each week, and what happens if at the end of the month we have done better than we thought? This might be a question carrying on from the question that you've answered, Pawel.
On the monthly stuff. Yeah, look, until we go through a month two, none of us will probably know the full practicalities of that. I think there's an element of a genuine attempt at forecasting. If you have done a genuine attempt and the forecast you put in is based on solid assumptions that you didn't have any other information at the time, and and your actuals might not, might look a little bit different at the end of the month, that's probably okay. I mean, I think the ATO has already said they're going to be quite lenient. They understand the difficulty in forecasting, but if you find that you lower this month by a significant amount, and you still say that you qualify next month, and you don't qualify again next month because your actuals were a lot higher, and you do that again next month, I think that's where you're going to run into problems. So the intent there is to be pragmatic. I mean, you can only do what you can do, and your forecasting is as best as you can do based on the information you have. If at the end of the month it is what it is, then I guess it'll fall into your next month's projection as to whether you think you qualify or not. If you do the right thing, this is really not to catch out people at a pedantic level. It's really there to catch up some systemic behaviours, which otherwise would be quite easily to do. So I think in your particular scenario, I wouldn't stress too much. Having said that, we'll all find out, after a month or 2 or 3 of this. And by the way, there'll probably be clarifications once the ATO actually sees some of this falling through as well. So I wouldn't be surprised if over the next month or 2, there'll be some very specific clarifications to that scenario.
Thanks, Pawel.
I imagine that is one of the reasons that the ATO decided to do it in that way, to, it's a safety net. If you have to outlay this initial 1,500, you'd want to be pretty sure that you're going to be close to that, to meeting the eligibility. So I don't think yet, as Pawel said, people that are attempting to do the right thing and have solid records to show that they were suitable projections, I think it would be fine at this stage.
It'll be fine, exactly.
Perfect. Thanks for that. A question here for you, Nat. We have a decreased cash received in March, but our April cash received is high. Do I need to deregister for JobKeeper going forward, or am I entitled to keep receiving JobKeeper until the end?
No, so once you're in, you're in. So provided you met that first eligibility in the first period, moving forward, you should be fine. As we mentioned earlier, though, you will need to keep reporting back. So there's potential that could change, but at this stage, if you have become eligible in the first period, then you're in.
Yeah, but each month as you reassess where your business is, I guess you'll be confirming that you're still eligible every month. So that monthly process we just talked about will probably be quite relevant in this case as well.
Mm-hmm.
Thanks for that. We might go over time a little bit here. I've just got a few more questions that I want you guys to answer for all of our attendees here. We won't take up too much more of your time. I've got a question here for Jon. What is the best way to manage expectations with clients with supply chains, materials being slow?
So at the moment, because there is a lot of uncertainty, the number one thing that you can be responsible for is creating as much certainty as possible. And I mentioned earlier, now's the time to double down on your communication at all levels, not just with customers, but with suppliers and with your team. What we're looking at doing is, this time of leadership is about increasing the frequency of all of your communication and taking that on. So creating as much certainty as possible. So Amy, what was the first part of that question again? Just regarding managing expectations, was it, with customers?
Yeah, what is the best way to manage expectations with clients?
Yeah.
With supply chain material. Yeah.
Yeah, beautiful. So the number one thing I would be doing is you're relying on materials for job completion. I'd be in touch with your suppliers regularly to make sure and understand where their supply chain is at, understand how they're being impacted, particularly if there's imports coming in with some of the the materials that they're supplying for you, and depending on who that is. So double down on your communication, check in just to make sure that things are going to be available for the work that you've got in the pipeline. The other thing we've been working with clients on is structuring, how to structure those conversations with clients to manage expectations. So an example could be, hey, listen, I know we were due to finish our project by the end of April, in May, end of June, or whatever that is. And we're still going to be working with you to ensure that we can make that happen, given the restrictions that could be on. I just want to let you know at the moment we're in touch with our suppliers to make sure we've got all of our materials, and we'll keep you up to date. But also with the uncertainty of what's going on, we'll also be on the front foot with you, just to make sure you're aware of where things are at. And if there are going to be delays, you'll be the first person to know, particularly from our suppliers. So I'm just telling you where we're at, what we're doing, to give you the confidence, because remember, it's about taking that uncertainty into confidence, or fear into certainty, and just to reassure you what we're doing with our team as well, because we're still expecting to be able to finish projects on time and on budget. But if things change, you'll be the first person to know. So just that phone call, it might have been a weekly call previously, every twice a week now with customers, to give them the confidence that you're managing yourself and the supply chain and the relationship with them as best as possible. So hopefully that might have sparked some answer there.
Yeah, thanks for that,
Yeah,
Jon.
and it probably sparked a thought. It's probably actually sparked just a point to make for myself as well. And I guess it comes down to the definition of client, whether it's a direct engagement at a residential level or commercial or whatever, in which case, I think that's very, very sound, or whether there's a head contractor involved. And in those more complex cases, I'd probably, go a level lower or a step further. And again, I'd actually check your contracts, and particularly if there's any extension of time clauses there, I would definitely be putting in submissions to make sure that you're getting that on record as soon as you have confirmation, or you know that the job might get delayed. There's a whole set of implications around liquidated damages, penalties, all that kind of stuff. So getting that extension of time submitted, lodged, and worked through in a timely manner, absolutely critical, particularly for, like I said, the more complex, the head contractor type engagement type of jobs as well. So just another, it depends, what kind of job and you have.
Totally, and with some clients who are in that sort of subcontractor to a head contractor position at the moment, again, managing expectations with the head contractor, if there's any EOT or extension of times, that's communicated. And I think there's an element of leniency at this point in time, but obviously you never want to assume that you just want to make sure that it's really clear, and the understanding is if there's an extension of time, it's worth through this
assume,
together.
Jon, never assume is the message I think to our members. Always cover yourself.
Double down on your communication, double down, be in communication more often, and work through it together. And I think that's the key.
Yeah, no, I totally agree. Yeah, spot on.
Thanks for that. I've got another question here for Nat. Hi guys, just wondering, if an employee does not give permission for the JobKeeper nomination notice form, what does this mean for our business, and can we still claim the JobKeeper payment?
No, so my understanding is that if the employee opts out, they're not going to be eligible. It just essentially means that for that employee, you won't be receiving any payment from the ATO. Trying to think of the reasons that they might like to opt out. I don't think it would be too common, but they have that option.
That's right. Yeah, I agree. And I guess one scenario could be where an employee works in for two employers. You can only select one. That's one scenario. I don't know if that applies in this particular case, but that would be one example of where you only need to pick one employer, and only one employer can get the payment.
Yeah.
Thanks for that. I'll do one more question, and then we'll close this one off for you guys. So should there be an issue with supply chains, unforeseeable delays, etc., is this covered by force majeure in contracts?
Force majeure.
Sure.
It depends on the contract. Unfortunately, there's no black and white. There's probably two major flavors of contracts floating out there. One does cover things like the pandemic in broader construction industry. The other doesn't so well. So it really depends on the specific contract. So in this case, the generic answer is that it depends. There's generally two flavors of contracts out there. One does, one doesn't. Check your contract, or if you need guidance, reach out to us and we'll help you with that. But it really depends on what contracts you've signed and what's in scope.
Thanks for that. Do you guys have any final insights or tips for our attendees before we close off this session? Anyone?
Probably the key thing here is, I think, keep focusing on the things you can control, because there's a lot of things that you can't. There's a lot of things going on out there, and the key thing is go from consumption to creation. If you're out there and you're listening to the opinions and the beliefs and the news and all of the media out there, listen, there's an element of the media which is important, which tells you the facts and the updates, but the majority of out there is based on hypothesis and opinions and beliefs. And what we're finding at the moment with our clients, as soon as they understand, well, I can control this much, that's what I'm going to focus on each and every day. Communication, future work, the things I can influence versus what's going on out there, which is concerning, but I can't actually do anything about it. So stay focused, be clear on the direction, and hey, we'll be through this, sooner than a lot of other people, I think. So that's the key from us.
A lot of noise out there, John. I agree. I mean, the other thing I would say is actually focus on your clients. If there's, one time to really focus on clients and show your commitment to them, now is the time. They will appreciate it long term. I mean, I think, the balance of power has probably shifted now. There's a lot of issues on both sides. That it will pay dividends in the end. So focus on your clients, guys.
I might just add as well, from a workplace relations perspective, make sure you're talking to your people. A lot of the, the stand down provisions and things that are being implemented, consultation is key. So if we want to, look into moving towards the future, there could potentially be some issues if you're not consulting and meeting those requirements. So be transparent. You can tell them that you don't know all the answers right now, but you're doing the best you can, and work with them. So if they want to take a bit of leave or to make up part of their stand down, then you can explore those options and keep talking to us as well, because things are changing every day. So we're always here to help.
Thanks for that. There's been some great discussion. Yeah. One last thing, Pawel? Anybody?
No. I was just saying, we are here to help. Please use us. Please use us. Nothing makes the team more happy than when we actually get calls and are actually able to help members out there. So bring it on. It's been a journey, but bring it on.
Yes, absolutely. There's been some great discussion taking place this morning. I want to thank you all for joining us. I hope the answers provided some clarity for you to operate your business more effectively through the uncertainty. If you didn't get the opportunity to ask a question online, please send it via chat now or email us on necavic@neca.asn.au. We will respond to you in all individually. A copy of the webinar, a copy of the recording of the webinar will be available on the NECA Vic website if you want to rewatch and share this with your team. You can also see a full schedule of upcoming webinars. I encourage you to register even if you can't attend, and we'll share the recording with you. Thanks again, and enjoy the rest of your day.